Hi, so welcome to my YouTube channel. I am Siti from Syakur, and I'll be presenting Chapter 1, Introduction to Financial Accounting and Cost Accounting. So I'll be elaborating a little about the financial accounting and cost accounting. I'll be elaborating on the introductions. So these both, financial accounting and cost accounting, is actually helps in the management to formulate and cost control the organization's policies. Such an example like financial management, they gives an overall pictures of profit or loss, and costing provides the detailed product-wise analysis. It is no doubt that the purpose of both is same, but still there is a lot of difference in financial accounting and cost accounting. So here are the contents. The first one is the definitions. I'll be elaborating on the definitions of financial accounting and cost accounting. The second, I'll be explaining on the differences between the financial accounting and cost accounting. The third point is objectives. I will explain on the objectives for financial accounting and cost accounting. And last, I'll be elaborating more detail about the internal and external uses of financial information. So for the definition, financial accounting is concerned with the provisions of information to users and reporting of the performance result on also financial positions of the business. Meanwhile, the cost accounting is concerned with the accumulations of cost accounting information for a company's internal users, such as operation managers and supervisors. This is done in order to help run the business more efficient and effective. Here, I'll be explaining on the differences between the financial accounting and cost accounting. So for the objectives, financial accounting shows financial performance. It provides information about the financial performance and also the financial positions of the business. Meanwhile, for the cost accounting, their objectives is to provide information which relates to the ascertainment of cost to control and for decision making about the cost. For data recording, financial accounting records historical data. For cost accounting, it records historical, current, and future. This means that it records all the history data, present, and also the estimated or budgeted data. It makes use of both the historical cost and predetermined cost. In time period, financial accounting are usually prepared for a definite period, usually a year, while for the cost accounting, the time period is not specific. The reporting period is determined as per need or prepared as when required. And for the analysis of cost and profit, financial accounting shows the profit or loss of the organizations in a whole, while for the cost accounting, the analysis the responsibility account, which it provides the details of cost and profit of each products, process, job, and contracts. Now I will be elaborating on the objectives of financial accounting. There are 5 objectives in financial accounting. So the first one is to keep systematic records. Accounting is done to keep a systematic record of financial transactions. But the second objective is to protect business properties. Accounting provides protection to business properties from unjustified and unwarranted use. This is possible on account of the accounting supplying the information to the manager or the proprietor. Third objective is to ascertain the operational profit or loss. Accounting helps in ascertaining the net profit earned or loss suffered on account of carrying the business. This is done by keeping a proper record of revenues and expense of a particular period. The fourth objective is to ascertain the financial positions of the business. The statement of income gives the amount of profit or loss made by the business during a particular period. However, it is not enough. And last objective in financial accounting is to provide information system. Accounting functions as an information system for collecting and communicating economic information about the business enterprise. Now we will go through on the objectives of cost accounting. There are 5 objectives. The first one is to determine the cost of product. So cost accounting, they ascertain the cost of productions of each job, process, or work ordered by applying different methods of cost accounting, such as job costing, process operation costing, and contract costing. For the second objective is the fixations of selling prices. So cost accounting helps it to find out cost of production and fixations of selling prices of the product or process job in the operation. The third objective is the measurement of efficiency. So cost accounting measures the efficiency of each product, process, or departments by applying standard cost method. The fourth objective in cost accounting is cost control procedure. Cost accounting control costs by setting standards and compared with the actual. Last objectives in cost accounting is reporting to the management. Cost accounting reports to the management periodically, which may be monthly, quarterly, or half-yearly. So for the last point, we will go through in the internal uses and also the external uses later on of financial information. In this internal uses, I've prepared 10. The first one is management. So management usually use financial information in order as a guideline to plan, organize, and control the organizations, as also to analyze the performance of the business. The second internal uses is owners. Owners use financial information regularly to make significant business decision and determine if the business is profitable, whether to continue, improve, or drop it. The third internal uses is employees. Employees use financial information to assess the stability and profitability of the employers, the ability to provide salary and other benefits, such as retirement benefits. The fourth internal uses is marketing department. Marketing department use financial information as a guideline to determine the policies and the price of the products to be marked. The fifth is employee union. An employee union uses financial information to ensure that their demands to the employer, such as salary increments and other benefits, are reasonable compared with the company's financial ability. The sixth internal uses is officers or directors. In order to effectively carry out their duties and to determine whether the organization is working towards its objectives. The seventh internal uses is shareholder. Shareholder use financial information to provide insight for shareholders for an idea of a company's creditworthiness and also financial integrity. The eighth by internal uses is budget officers. So budget officers usually use financial information to implement budgeting and financial record keeping procedures in order to ensure efficient coordination of various departments. The ninth internal uses is controllers, primarily responsible for providing accurate and timely company reports by managing the accounting function. Last, for internal uses is finance department. So finance department usually use financial information to enable them evaluate the ability of the organizations or a company to pay its business debts. So from this slide, I'll be explaining on the external uses of financial information. So I also have prepared 10 external uses. The first one is lenders. Lenders use financial information to assess the ability to settle amount owed to them when due. Example like loan and interest. Second external uses is public. So mostly public will assess the contribution to local economy, like employment and business opportunities for local suppliers. The third external uses is customers or consumers. They assess the ability of the company to continue providing products and services. The fourth external uses is general public. General public use financial information in order to provide information about the results of operation, financial position, and cash flows of an organization. The fifth external uses is government. So government use financial information as they're interested in their financial statements and also to know the earnings for purpose of taxation. The sixth external uses in financial information is creditors. So creditors are largely watched from the point of view of security and further credit. It is because they want to know the soundness of the firm to supply goods and credit. Seven external uses is researcher. So researcher use financial information to identify market inefficiencies with respect to financial statements information. The eighth external uses is suppliers. Suppliers use financial information to assess the ability to settle the amount owed when due. The ninth external uses is current and future investor. They are usually concerned about the risk and return of the investment, example like dividend. Therefore, investors use financial information to determine whether to buy, hold, or sell their shares in investment. Lastly, for external users is tax authorities. Tax authorities use financial information in order to provide sufficient information for their account, such as tax preparer or the Internal Revenue Service to evaluate our tax situation. That is it, and I hope everyone enjoyed and understand. Thank you for lending me your ears.